Ladies and gentlemen, good day and welcome to the Matrimony.com Q3FY25 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jairam Shetty from ICICI Securities. Thank you, and over to you, sir.
Hi, everyone. On behalf of ICICI Securities, I would like to welcome you all to quarterly FY25 earnings call of Matrimony.com. From the company, we have Mr. Murugavel Janakiraman, MD and CEO, and Mr. Sushant Pai, the CFO. Over to you, Mr. Janakiraman, for your opening remarks.
Okay, thank you, Mr. Jairam Shetty. Good evening, everyone. As per Google report on matrimony industry, the whole industry has seen a 8% drop in search queries for the first ever time. So all the players, including long tail players, have seen a similar drop, and it is a broader industry trend. Our member registration has fallen broadly in line with the industry trend in the current financial year. So this has affected our monetization plans. During the last call, we are hopeful of revival in quarter 3 due to the marriage season and also due to the launch of our Great India Matchmaking Fest campaign. So the revenue was mooted when we spoke last time in October. We are hopeful of revival in November and December on account of the revival of the wedding season as well as the plans we had for the media campaign. However, we've seen a drop in November and December that has affected the overall plan for the quarter 3. However, we are taking new initiatives to drive the profile growth, including we are launching a vernacular-based app. We already have our apps available in Tamil, Telugu, and Malayalam, and we'll be launching our apps in other languages very soon. We are also backing up these apps in vernacular language with the TV communications. So once we make the app available in vernacular languages, we'll be amplifying that availability through the media campaign. And we also expect personalized services to have a double-digit growth on account of steps that we are taking to convert more members to go for personalized services. We are launching a new version of community matrimony apps sometime this month. We have a lot of community-based matrimony apps. These apps have been one of the important pillar of our growth, and they've been it's been a long time since we've made any significant changes on these apps, and we will launch a new version sometime this month. We continue to improve our product, and we are seeing increased engagement and increase in key metrics. We're also experimenting new ideas to drive growth on all fronts, including a new experiment and pricing strategies. We're also working on additional monetization plans. We're also taking steps to optimize our costs, and that may happen sometime in quarter 1. We expect improved margins once the revival happens. We expect the revival sometime probably in the coming quarters. Now coming to the results, in quarter 3, on a consolidated basis, we achieved a billing of rupees 109.4 crores, a decline of 1.5% quarter over quarter and 5.9% year on year. Revenue at rupees 111.4 crores, a decline of 3.5% quarter over quarter and 5.1% year on year. Key highlight for the matchmaking business in quarter 3 are as follows. Billing at rupees 108.3 crores, a decline of 1.4% quarter over quarter and 5% year on year. Revenue at rupees 110 crores, a decline of 3.6% quarter over quarter and 4.2% year on year. We added 2.38 lakhs paid subscription during the quarter, a decline of 3.7% quarter over quarter and 9.7% year on year. Average transaction value for the matchmaking business increased by 2.4% quarter over quarter and 5.1% year on year. We created about 27,700 plus success stories. Now coming to the marriage services and other business, billing were rupees 1 crore, a decline of 7.7% quarter over quarter and 50.7% year on year. Revenue was 1.34 crore, a growth of 7.8% quarter over quarter and decline of 42% year on year. Loss in the quarter was rupees 3.8 crores compared to loss of 3.64 crores in quarter 2 FY25. The losses will include new initiatives, including wedding loan, astrology, and other initiatives. On the billing and revenue output for quarter 4, we expect the growth in matchmaking billing in quarter 4 on a quarter-over-quarter basis. However, there will be a revenue decline due to the muted billing growth in quarter 3. Marriage service is expected to be at similar level of that of quarter 3. Now, let me pass on to Sushant to comment on the key profitability highlights. Over to you.
Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q3 is at 18.7% as compared to 22.6% in quarter 2 and 18.9% a year ago. Marketing expenses for matchmaking in quarter 3 are at 46.2 crores as compared to 45.2 crore in quarter 2 and 45.5 crore a year ago. Excluding marketing expenses, our margins in matchmaking are at 61% as compared to 59% a year ago. A slight improvement in margins excluding marketing expenses. On a consolidated basis, our EBITDA margins in Q3 are at 12.4% compared to 15.2% in quarter 2 and 14.3% a year ago. Tax rate in the quarter is at 17.6% as compared to 23.3% in quarter 2 due to higher long-term tax benefit after considering the holding period till quarter 3. This is expected to normalize in quarter 4. Profit after tax is at rupees 9.97 crore, a decline of 24.2% quarter-on-quarter and 10.2% year-on-year. Share of Q3 loss from Astrovision, our associate company, is about 5.1 lakhs. Cash balance is at rupees 315 crore. It declined as compared to Q2 due to the buyback that we just concluded in Q3. However, operating cash flow generation to EBITDA has been robust at 100%. ROCE is 10.4%. On the outlook for Q4 margins, as Muruga discussed, we are taking various measures to increase traction in our businesses and also various measures to optimize costs. However, we expect the PAT to be lower than the levels of Q3 due to the subdued business momentum. I would like to end with a customary safe harbor statement. Certain statements during this call could be forward-looking statements on our business. These involve a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time on behalf of the company unless it is required by law. Now we can start the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Damodaran N from Equitas Capital. Please go ahead.
Hello. Thank you for the opportunity. Hope I am audible.
Yes, Damodaran. Please go ahead.
Yeah. So, two questions in there.
Yes, please go ahead.
Yes, sir. He got disconnected. I'll reconnect him.
Disconnected. Okay, sure.
Hello.
Damodaran, go ahead with the questions. Yeah.
Yeah. Can you hear me?
Yes, Mr. Damodaran. Please go ahead.
Yeah. So, the question was on, revenue growth. So, we are seeing a strong marriage season currently, and your competitor also had reported numbers yesterday. And I know their base is much smaller. They have 1/4 our size, but they have still shown robust growth. We also were expecting this Muhurta season, the issue to get over by Q3, but we have seen billings also declining by 5%. So I really wanted to, check whether is this you have attributed this to an industry-wide issue, but going by the competition's numbers, at least the one that we can see, they have still reported strong growth, and we are still hearing of a strong marriage season. So where is the disconnect? And if you can throw some light, I mean, I heard your opening remarks, which when you referenced that Google report. So can you give some more color as to why there is this disconnect? I mean, between what we can see and what the numbers are.
Okay. What are the? You had two questions. This one question. What is the second one?
So the other one is kind of related. So the other one is on ad spends, and we have been investing fairly significantly on ads in the last four odd years. But yet despite that, I mean, we have seen revenue declining, and this is in the backdrop of, again, a competition now kind of easing off on ad spends and still, I mean, managing to grow revenue. So how should we look at ad spends? Is it the spend that is required to kind of maintain these current level of subscribers? Is that how we should look at it? Or, because incremental ad spends is not yielding the same kind of revenue. So your December subs are flat on a 2-year basis. So just wanted to, both the questions are kind of related. So if you can throw some light on this.
Thank you, Mr. Damodaran. We'll respond to the first one. You're talking about the competitor. So I think they made some changes 2 years back. The revenue were at certain base before they decided to offer a free service that impacted the revenue drop of 30%. Now decided to kind of move back to the earlier level. So sort of to some extent they have gone back to the earlier levels of revenue, what it was earlier. So definitely optimize the cost, and we've seen that once again they started the marketing campaign in Q3. So basically the competitor reporting the strong increase number. Basically they've gone back to the earlier trajectory what they had prior to the decision what they'd taken to offer a service as a free service when probably they did not see that helping. That they moved to different models. So basically, to large extent, they've gone back to the earlier levels of the business metric. Probably from the base, as rightly said, some growth happened from that base. It's not as it was. If you take that few years ago, what is the base that they had? On the base, they had a growth, that kind of thing. It's not the case. It is a more of change of business model, once again, gone back to the earlier level to large extent. So probably they would have done some execution slightly better on what are the margins they have, what are the bases they have. So the industry trend is broader. It's not limited to only one player. So obviously when you see some kind of better execution or some other parameter could have resulted in some marginal increase or maybe the pricing, whatever it is. So it's broadly that, but the industry trend is broad for everybody. So that's the point I want to communicate. Let's put the marketing spend. Because still the industry is continuing to operate on one of the players we thought this sort of top advertising once even is seen that the advertisement has started. So at this point of time everyone advertising. So we definitely see scope to optimize the marketing spend. As I mentioned in the beginning of the call, we definitely see that there's an opportunity to optimize the cost in all fronts. So we probably see that happening in the coming quarter. So but again without compromising on our intensity to compete across the market. So we definitely going to invest in North India and all the markets, but we definitely see the scope to optimize the cost. So we'll continue to invest on all fronts. At the same time, we could be able to run a better operation. So when the revenue come back to the earlier level, we definitely improved margin on our account of it.
Sure, sir. And just one, a related question. So, does this indicate that we are kind of saturated in our core southern market, and because the profiles, you called out profiles, top of the funnel profiles are not grown. So does that mean that we are facing a challenge because we are already fully penetrated in the southern market and we are not able to go outside the southern market for the same reason that the others are also not able to gain? There has been no market share gain by any player over the last 3-4 years. So, how should we look at the profile growth slowing down? Because so the real question is it structural in nature, or is it just a one-off thing that's happening this year?
What is the reason for the broad industry trend? That's something while it could be attributed to various reasons. But however, in terms of a question, are we saturated or limited to south? It's not the case. We are, our leadership is, it's not really limited to south. We are leader in west, a leader in east, and while not, we are one of the players, and we are taking steps to drive our penetration in the northern market. So while you talk about the overall industry put together, the entire reach maybe around 10 million users per annum compared to 60 million people are looking for life partners. So there is definitely a headroom to grow. But that's one side on top of the funnel. So the steps what we are taking, we are the only player launched now app in regional languages. We see that could be an opportunity. So we launched, we are now taking steps to get more members to sign up on our platform. So we are going to take some steps. We are taking steps. While I spoke about language, one of the things, we are definitely looking at other avenues to also drive the profile acquisitions. So we don't see that, it's not a saturation because sometimes the industry may go through it. I don't know whether it is. So one of the, again, my theory is that I may be wrong also. During the COVID time, we saw the surge in profiles. I don't know whether that surge was maybe now getting normalized. I don't know. So at this point of time, no idea on why the broad industry has declined. However, it's not that saturation has happened. That's definitely not the case. So we need to work on various ways to drive the top of the graph. One is the language. We are also taking other initiatives. We are definitely highly confident of that driving the top of the funnel. However, the top of the funnel is only one side of the story. So definitely there is a conversion, there is ARPU. Now we are looking at various strategies to drive these things. Definitely we see this year we'll definitely able to demonstrate success in some other fronts because we are launching a new version of communitymatrimony.com. There are plans around how to effectively leverage both the brands. So there are solid plans around it. We are also taking new initiatives. So I think in a way it was while it was challenging, but again we are using this as a challenge towards an opportunity to how we can do better in all aspects. So while on one hand we be efficient organization, the other hand we are able to drive effectively the new initiatives plus the ideas what you're working on all fronts. I think I feel that maybe in the coming quarters we'll emerge much stronger and we'll move the growth path. So it's sort of fairly seem to be we are doing the right thing on quite confident about the steps what we are taking and the plans what we have.
Sure, sir. And just one more question on the new initiatives. Will the burn rate be in that 10-12 crore range that we have kind of maintained over the last 3-4 years? Or, since we have launched multiple new initiatives. So, or would you look at kind of increasing that threshold?
So basically, so what we are doing is, while definitely the lot of new initiatives, so at this point we don't want to burn too much of cash. So we are, again, some of the initiatives yet to monetize, be it paylow.com. We definitely, once you reach a certain user base, we want to monetize. So definitely those initiatives, once you reach a certain base, will start contributing. So at this point, I'm burning. So like that, other initiatives as well. So come to your question on, will the losses be more than what you have been think broadly it's in the same range, but once you see some traction, once you're able to see some phenomenal growth, once you're able to get a certain thing right, that's when I come back to on what the initiative to drive the growth. So I was thinking about not about it's a more of losses. It's about driving the growth and achieving a scale and size now. At this point in time, you can think that it be a similar range, but it's not a lot of experience happening. But definitely some other initiatives are very encouraging. So maybe in the coming quarters we'll have better visibility and better clarity on those things. So to answer the question, yeah, at this point in time, it will be ground in that.
Sure. That's it from my side. Thanks for answering my questions and all the best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Shreyaj Gathani from SG Securities. Please go ahead.
Hi, good afternoon. So my first question is around the new initiatives. So basically around many jobs. So if you just give, any kind of numbers that you can share about the number of employers and, the number of jobs which have been done there as such. So just trying to understand where the progress on that.
Again, at this point, I'm keeping it only to limit to Tamil Nadu is a free service. We intend to monetize once you reach 5 million resumes, once you reach probably 10,000 plus employers. And we already have close to a couple of lakhs of resumes, and it's going on fine. And as I told you, it's still in a very early stage. And so only when you reach certain base in terms of when you monetize, and we'll know the better clarity on this one. But at this point of time, we feel we are on the right path.
Got it. And the second question is around marriage services. So we've seen like a consistent burn over the years. Is there any services which you figured, which are not working out, so you like shut down or plan to do something of that sort? I understand the new initiatives, but something that's not working out, so that we can try to, reduce the cash burn on those fronts, something that has not worked out over a period of time.
Yeah, we already taking steps, and our university began the initiative that told we are trying. One is to make my wedding in Tamil Nadu. Like that, we are not investing all front on wedding services. Obviously, wedding services as the base and as the relationship we are trying to leverage for the new initiative. So basically, we are investing or focusing on initiatives where we feel a very good opportunity to scale up. So, and other things, it's more like in a way it's important for the overall the business model. So we're not going to invest aggressively on or invest on those fronts, but it has certain base, it has certain reach, it has certain relationship. Those relationships are important for the new business model. So obviously we are trying to achieve a break even or run it at a certain level, but investing in a new initiative, leveraging the base of the wedding services business.
Got it. Thank you. That's it from my end.
Thank you. We have our next question from the line of Vasudevan from True Value Investment. Please go ahead.
Hello, good evening, sir.
Yes, Mr. Vasudevan.
The thing is, I've seen your accounts for the last 2 years, sir. It has been very flat to negative, though you have explained now. You have taken initiative. Even the next quarter, you are slightly subdued return only you are expecting it. How long will it take actually to show up? It is very flat and with a negative bias for the last, say, 6 to 7 quarters, sir. And this is my first question. And after this, I've got a suggestion to make also, sir. Can I make it right now or after you are answering the question, sir?
No, whatever. So you can go ahead on the suggestion as well.
And, I came across how much is your revenue from that Astro Match or something like that you have? No? Huh?
Okay.
That astrology based.
Yeah. Okay. Regarding the thing in terms of the last couple of years, so basically, so while the reasons already told, and we are definitely a revival of the numbers sometime in the coming quarters. Once again, it's not only that the profit issue, we are taking a lot of steps. Once I think move to that the growth path, I think the margins definitely get better because it's already operating costs. I think we are definitely hopeful of revival in the coming year, the coming financial year. Whether one or two quarters down the line, maybe little longer also. But we're hopeful of yearly revival than taking longer time. But at this point in time, not sure. So we are confident of revival in the early quarters. In terms of astrology, at this point in time, we are not giving the breakup of things. We are also experimenting various things in astrology. And so, in fact, we are planning to change some model on astrology. So that may happen sometime this month. So at this point, I'm not giving the breakup, Mr. Vasudevan.
And can I suggest one thing, sir? I came across a startup in Delhi called AstroTalk, sir. They are purely on the astrology only. Their total turnover per year is 600 crores. I think this astrology is a low-hanging fruit. I think now matrimony.com, it is a time of 600 crores a startup is making in Delhi. I think with a strong foundation which you are having, I think you can penetrate deep on this this one, sir, in that segment. This is my suggestion. Actually, it's a huge chance for you to show up your top line and bottom line also, sir. This astrology is very, that will contribute much more to your, for your matrimony account, sir. That is what I feel, sir.
Thank you, Mr. Vasudevan. So we have some plans around it to probably see some new initiative coming in that sense, or we are repositioning something in our astrology to create this opportunity. Thank you so much, sir.
Oh, okay, sir. Thank you, sir. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. The next question is from the line of Avinash Bhaskar, a shareholder. Please go ahead.
Hey, hi. Thanks for the opportunity. So the first question that I have is there any evidence of us losing, let's say, market share in terms of new app downloads or profiles, specifically in the South market to Shaadi because of their lot of ads around tamilshadi.com or anything of that sort, especially at the app level, app downloads?
So basically, while we continue our very high market share in South and in other market as well. So we also plans to leverage our reach. We launched a new version of Bharat Matrimony, Community Matrimony, all these matrimony sites. We have plans to cross leverage all our matrimony apps. So we see in the coming quarter, we'll definitely effectively leverage our reach and thing to benefit all our groups offering. So basically, last couple of years been working on a lot of improvements on the core product offering and still the work in progress. We hope to complete some of the key changes in the coming months, hopefully by March. Post that, we definitely look at leveraging the network of sites for cross-promote, cross-leverage. So we definitely see action happening that way. So more of, at this point of time, we want to get that core product right. And we see definitely Bharat Matrimony sites, including all these language-based sites. We've seen that metrics going up. In fact, the key metrics are moving up and engagements are pretty good. So once the revamp happens, as we've been working in progress for quite some time, then we see that we could be able to leverage our reach for promoting all our group apps effectively.
Got it. So what I should understand is, historically speaking, there has been no change. Is that what I should take?
It's basically been it's more of silos. We work on individual sites and also there have been world over site. What is a community matrimony site? It's been a long time since you've done the revamp. So the way you are looking at the new version which you're going to launch will be similar of matrimony, the matrimony thing. So it will be a similar functionality. So maybe the look and feel may be different. So it's they make it easy for a customer to even use our services. So that's going to happen. It's all taken a little longer time because of consider the volume of the apps and all that. I think we see that the action in the coming quarter in terms of how we effectively going to leverage the network of sites.
Okay. Got it. Then the second is this latest matchmaking fest campaign. So is that completed and any has there been any considerable impact on any metrics? How should I look at it as a shareholder?
Which one?
The matchmaking, the Great Indian Matchmaking Fest.
So it was yet another campaign. Didn't possibly the desired results or whatever. I don't know whether it was an industry trend or something. Anyway, we have sort of launched a new TV campaign since we launched our apps in the vernacular language. That's one of our communication new commercials. So we now launch a new TV commercial across India, and so communicating a sense of message platform.
Okay. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. The next question is from the line of Prabhu Sampath, an individual investor. Please go ahead. Mr. Prabhu, we request you to unmute your line and go for the questions. Mr. Prabhu. The next question is from the line of Mani, a shareholder. Please go ahead.
Hi, good afternoon. Sir, my question is regarding ad spends. Despite your multiple communication regarding ad spends being elevated, since it has been happening for quite a few years, there's a little bit of thinking worry that probably this competitive dynamics has, or the industry sector has kind of changed, that this probably becomes a norm, especially considering our kind of industry where you have drop-offs in terms of profiles on a regular basis. So what I would like to understand is, leaving the competition aside, how has our ad spend been spent in the last 4 or 5 years? How much of it was used for gaining market share in the northern and the western markets where we are traditionally slightly weak? or how much of it is being used for defense against the inflow of competition in certain markets and all. So if you can just split it up a little bit, and in terms of strategy, how did you go about spending your ad in the last couple of years, and where did you get return on investment commensurate to the spends, and where do you see levels of optimization in the future forward? So that will help us explain in terms of whether structurally anything has changed in this industry, or whether it is just a phase of increased ad spend and it is going to go away in the future. So that confidence I'm not getting because of last 4-5 years of continuous elevated spend. So if you can assuage that fears, that will be helpful.
Thank you, Mani. I think there are a combination of multiple things. Look at the ad spend, we definitely elevated level. What are the reasons? There are multiple reasons. One is that increased competition. When the people are fighting for the market share, then obviously everything shoots up, including our digital spend and be it on the Google, because people are trying to grab the market share. Then only the ad spend goes up on the platform, because people are trying to get the share of the thing, and people are trying to defend the market share, or people are trying to grab the share. So basically, the elevated spend contribute to increase in digital spend, because the people are trying to get, even digital has gone up. We're talking about the Google spend, because everybody trying to spend for this keyword and all, or maybe on the advertising platform. Plus also TV, obviously people are trying to get a share, and that means you are spending more than what is required. So is the elevated level of marketing spend not required? No, it's not required. It's a more of, if everyone wants to think, then obviously some people try to grab, some people try to defend, or it's a combination of both the things. The net industry at a certain dynamics now. But I will say that there will be some kind of softness. One of the players, obviously, they try to enter on India. They realize that they better to focus on one market. So that has happened. Definitely, that is one thing. We also see some market, some smaller markets, some ad spend has come down or not that. So still it's not still at a higher level, but we see some kind of softness. How long it's going to continue, I'm not sure. Okay, so but in definitely digital, it's gone up. TV, yes, it's there, but it's some market we see some kind of softness. So, but still at a higher level. But definitely this level of spend is required, not required. It's a more of everybody wants to spend. But I will say that let the competition whatever be there also. Now we are taking steps irrespective of what will be the competition, irrespective of all. We are now working on the ways to drive our growth and all. So we're taking new initiatives or new strategies. So I think that's the roadmap for us for the coming year.
Sir, just to follow up, how should we look at it? Should we think, like, since you mentioned that digital probably it has gone up slightly more, do we look at it as there are certain mediums like digital versus TV where we are spending lesser, so we had to up our spend in terms of digital to beat the bare minimum? Or should we look at certain markets where we were like instead of underspending, so that's why we had to keep it up? Or do we look at it as certain markets we were spending the requisite level, but then since competition has come in and they had spent a lot more, so we had to increase our spend just to cope with that the elevated spend? I'm still not getting a complete clarity in terms of where exactly our spend was increased, and if so, what is the reason behind that increase, and what have we learned from it, and then future forward, why should we get the confidence that it's going to go down because it is a completely wasteful spend? So that part, if you can just expand on it a little bit.
No, that's the thing, Mani. The thing is that I'm not getting into a market-wise, that this market you are investing to defend, this market you need to grab, because that's a more of the competitive thing. We are not getting to the detail. However, we're talking about, are we spending more money than what is required? Definitely that's the case. Even for this, even say some market, it is difficult to split into various things. Some market, our spend has gone up just because there is increase in marketing spend, much more than what is required for the market. We increase so that we are also have a certain level of visibility in the market. So that's a point number one. So are you spending more than what is required just because of increased competition? Yes, that's the case. There are markets investing to grow. Yes, there are markets investing to grow also. So look at North India, definitely investing to grow. Now, this month we're going to have both Bharat Matrimony as well as Community Matrimony TV campaign in North India, because we feel that why not grow combination of Bharat Matrimony Community in North India. So basically it's a combination of both of things. I'm not getting into at this point of time money that, okay, this market is spending more. Overall, to say that is definitely the marketing spend. I think in the past also short. Our marketing spend around, well, definitely going to see some reduction in the coming quarter on the marketing spend, because we definitely see that the scope to run efficiency without compromising on the required visibility or required spend to defend the market or grow the market. We definitely see some kind of optimization possible. That's going to happen. To this one, if you look at what is the marketing spend, I think it can be even easily instead of say 47 crores, probably you can even 36 crores now, but if the competition can go down. So that's the kind of, you don't even spend that kind of money on market. Or even 30 crores per quarter is good enough.
Okay, sir, thank you. And just one last thing, I also wanted to wish Sushant for his time at Matrimony. I found his communication to be very sensible and fair, and I wish him the best in all his future endeavors. Thank you.
Sushant, want to respond to it? Yeah, he's done a great job, and definitely wish him all the best. He's one of the leaders who have done a good contribution to Matrimony.
Thank you, Mani, for your kind words. It's been a great journey and learning for me at Matrimony, and I wish you also the very best in all your efforts.
Thanks.
Thank you. A reminder to all participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. A reminder to all participants, if you wish to ask a question, you may press star and 1. A reminder to all participants, if you wish to ask question, you may press star and 1. The next question is from the line of Madhur Rathi from Counter Cyclical Investment. Please go ahead.
So thank you for the opportunity. Sir, I'm trying to understand. I joined the call a bit late. So I wanted to understand, sir, this drop in billing, and it has been constant for the past 2 to 3 quarters. So why is that, and what are the efforts that we are taking to increase this billing rate? On that. And second question would be, so there has been an increase in average transaction value. So has this been because of the Elite and the other services that we are providing, or anything else?
Yeah, thank you, Mr. Madhur Rathi. One is that we think that the profit registration dropped to some extent in line with the Google report which you shared. As per the Google report, the industry has seen a 8% decline in the search queries across the players. And we are also broadly in line, and that has affected the top of the line. The funnel got affected. That has resulted in the degrowth. The good thing that we are not seeing any drop in conversion metrics on account of the drop in registration. We continue to convert very well. So in terms of, that's the reason we are taking steps to review the profile appreciations and to launch our apps in vernacular languages, and also we are taking other steps to drive the growth, including improving the conversion pricing strategy. In terms of what is the increase in ARPU reason, the mix, one is about our pricing strategies, and also some mix of change on account of personal services moving up. So when the percentage higher ARPU, that has resulted in the increase in ARPU.
Okay, got it. So do we follow some kind of a micro transaction or those kind of strategies like a freemium model where similar to our competitors, or do we plan to utilize some of these strategies going forward?
So while there are different pricing strategies, while definitely there are some plans to provide some monetize differently, provide some add-on services. So we are working on various pricing strategies, and we definitely look at things like some small payments for some services. So those plans are there.
Okay, got it. And sir, over a longer term, maybe a 2 to 3 year period, as the competition succeeds or the marketing spend succeeds, so where do we see our business growing in terms of number of users, billing, as well as the margin on the margin front?
So margin front, it definitely move out. We can definitely move very well. Because today we're operating at 12% tax margin. So it can even go to 20 or higher percent as well. So it depends on both our top line growth and marketing costs going up on it. EBITDA will be definitely high, but I think overall that is PAT level. And EBITDA level, definitely you can easily comfortably go beyond 2025 also.
Okay, got it. So those were my questions from my side. So thank you so much and all the best.
Thank you.
Thank you. A reminder to all participants, you may press star and one to ask questions. A reminder to all participants, you may press star and one to ask questions.
If there are no questions, maybe we can close.
Okay, sir. Ladies and gentlemen, as there are no further questions, I now hand the call to management for closing comments. Over to you, sir.
Thank you to ICICI Securities for hosting this call, and thank you all for joining. We look forward to speaking with you in the coming quarter, and if you have any questions, please do write to us. Thank you.
Thank you very much, sir. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.